Good afternoon, ladies and gentlemen. Thank you for taking time off to join us this Friday afternoon. Before we begin the webinar, here are a few housekeeping reminders. All attendees are automatically muted and will be on listen-only mode during the entire session. You can change the video layout on your screen to see the speakers more or the presentation. If you're accessing the webinar through the WebEx desktop app or WebEx web app, there's an icon on the upper right portion of your screen. You can press this anytime to change from active speaker video view to active speaker and thumbnail view or grid view. For those using the mobile app through mobile phones or tablets, watching the session in portrait orientation allows you to see both the presentation and the active speaker. Use the landscape orientation if you want to see the presentation slides in full screen mode. To switch between video layouts, simply tap on the button at the upper right corner of the active speaker screen. We encourage everyone to participate. If you have questions or comments, simply submit them in the Q&A section located on the right-hand portion of your screen. We will line them up and answer as many as we can during the Q&A portion at the latter part of the webinar. If we don't get to answer your questions live, we'll definitely respond via email. Lastly, this webinar is being recorded. In case you need to leave early, the recording of this session will be made available later on in the BDO Unibank's official YouTube channel. Today's session will be hosted by one of BDO Trust Group's seasoned investment analysts. She has over 13 years of experience as an analyst for global and domestic macro research, providing economic briefings on macroeconomic developments in both local and foreign economies. She is also a fund manager who actively manages the offshore equity portfolios of institutional clients. Let's welcome our webinar host, Ms. Patty San Diego.
Good afternoon. We hope everyone is safe and well. I am Patty San Diego, and welcome to the second episode of Market Sense, a webinar series of BDO Trust Group that combines the latest market developments and analysis with seasoned expert advice to help you take control of your investments and build your wealth. This afternoon's discussion will be all about seizing opportunities beyond borders in another currency and in the global markets today. But before we kickstart that discussion, let me take you through a quick recap of what happened in our premiere episode, just in case you missed it. Our first episode was all about finding opportunities in the new normal. Being faced with a crisis, we tend to get easily swayed by news flow, market movements in a short span of time. But when it comes to investing, we must remember that we need to think long-term. You need to have a long-term mindset, and that make sure that you don't have all your money in one asset class. In every crisis, there are opportunities, but you must have the courage to not only look for them, but more so, act on it. And what are the opportunities right now for a local investor? One is that despite expectations of interest rates remaining low for quite some time, you can continue to build your bond portfolio. But look for those higher yielding fixed income instruments, such as those of corporate bonds that mature in the next 2 to 5 years. For clients who have investments in stocks, we encourage you to hold on to them and ride the volatility. And if you can, maybe buy some more, especially as some of the stock prices right now have come down significantly as what we refer to as a mega sale, because a recovery usually comes after a crisis, and you will eventually reap the rewards for doing so. And finally, this is what this afternoon's conversation will be all about. about investing beyond borders because we think there's an opportunity right now to consider investing in US dollars. And to join me this afternoon is a familiar face. He is a two-time Asia Asset Management awardee as the Philippine CIO of the Year. And he currently helps oversee almost ₱1 trillion of assets under management as the Chief Investment Officer of BDO Unibank Inc. Ladies and gentlemen, Mr. Fritz Ocampo. Hello, Fritz.
Hi, Patty.
Glad you could join us this afternoon. Thank you for accepting our invite to join us for back-to-back episodes. So my first main question for you this afternoon, why should any investor consider investing in dollar assets?
Well, diversification is always the key word here, Patty. And when you look at the last 3 to 5 years, the local equity market has underperformed the global equities markets. And an investor or a client could look at offshore investments to complement their peso portfolio, especially now wherein we are at a global pandemic and global equities would attract more funds, more investors rather than the local equity market.
So again, this is in line with your recommendation or what you've shared in our first episode, not just during times of crisis, but when it comes to investing, one big basic principle is to make sure that you have a diversified portfolio.
Definitely. Most of our clients have been very happy during the last decade, wherein local investments, both fixed income and equities, did quite well. But right now, the tide is turning, and it might be a good time to look at global markets to complement one's purely peso portfolio.
And talking about peso portfolio, earlier I shared again your third investment idea for our clients in our first episode, which is to buy the dollars when the peso is strong and invest in dollar assets. Let me ask you now, why has been the peso strong since the last time we had?
Well, simply put, the peso has been surprisingly strong because our imports have gone down. Imports of both the government and the private sector practically collapsed as we closed the economy, as we went into quarantine. And since there is very little demand for the US dollar to pay for those imports, the peso has been steadily appreciating. Aside from lower imports, which has reduced the trade deficit, your gross international reserves is also at an all-time high. And right now at 93 billion, that's good enough for more than 8 months worth of imports. So these two factors combined has resulted in a balance of payments surplus from a deficit. And that has allowed the peso to gain strength year to date.
Now let me go backtrack to the first episode wherein it was mentioned that economic growth for the country this year will be bad. Basically, we're seeing a contraction for the Philippine economy, the first in 2 decades. Will that play an impact in terms of where the peso will be towards the year end or by the year end? Where do you see the peso by the year end?
Well, right now we think that the peso could be relatively stable in the near term at these levels of 49.20 to 49.40. this would be ideal levels to slowly accumulate the dollar. By year end, the peso could weaken a bit on account of stronger demand for the US dollar. But for this year, the peso would remain relatively strong, probably closing closer to 50 to the US dollar. But as the economy continues to reopen and construction starts to begin again or resume the projects that are in the pipeline, then expect our import demand to accelerate once again. And this could be the catalyst for a weakening of the peso moving forward.
But right now, as the peso is strong, it's a good time to buy dollars. Correct?
Definitely. The peso is right now at a 3-year high. And as we mentioned earlier, the factors that are allowing the peso to strengthen are temporary. In fact, the peso right now is the best performing currency in the Asia Pacific region, up more than 2%. And when you look at previous crisis levels, the global financial crisis of 2008 and the Asian financial crisis of 1997, in both of these crises and in previous political crises as well, the peso would usually be weak. And when you look at Indonesian rupee or the Indonesian rupiah, these currencies are weak right now, very typical of crisis behavior. So I'd say that the peso appreciation right now is out of character, and I would encourage our clients to take advantage of this opportunity to accumulate the US dollar, to slowly or gradually accumulate the US dollar. That's step one.
Yes.
Step two, of course, is to invest those US dollars.
So when it comes to investing, we must also have a grasp of the backdrop of what will affect our investments. And again, going back to our discussion during the first episode about how not only the Philippines, but most countries right now are expected to experience a recession or have their economies in contraction for this year, resulting to massive and aggressive responses from both governments as well as central banks. Now, will that play an impact in terms of where interest rates will be?
Well, you're right, Patty. Right now, because of the pandemic, we're seeing a global economic recession. No country is spared. And when there's economic weakness, central banks tend to cut interest rates. And that's exactly what has happened. From the US Federal Reserve to China, all the way to our own Bangko Sentral ng Pilipinas, or the BSP. These central banks have led in cutting interest rates. You cut interest rates in order to stimulate economic growth, to encourage the households to borrow, to encourage the firms to hire, borrow money, and increase capital expenditures and create jobs. And these interest rate cuts by central banks has led into lower yields in the secondary market. These lower yields has resulted into higher bond prices, which is good for investors. And hopefully moving forward, this would tend to stimulate economic demand as well.
Now, when in a crisis, we've seen in the past that equity markets tend to really decline in a big way. And we did see that early this year. However, surprisingly, and it personally puzzles me, why, as of the last 2 months, global equity markets have recovered. what is driving that equity market rally right now?
That's a very good question, Patty. Immediately after many economies declared a lockdown, or in our case, a quarantine, the equity markets, being a forward-looking mechanism, immediately priced in a recession. And you saw a steep drop in equity markets, global and local, in mid-March. Many markets falling by over 20%, a signal that we are in bear territory. But as soon as both the government as well as central banks declared or announced their stimulus packages,
Stimulus measures.
the markets immediately recovered from end March all the way to end June, or in the second quarter. You saw many markets, including our own PSE, bounce back by more than 20%. A reflection that equity markets indeed are forward-looking, way ahead usually than Main Street or the real economy.
My next question, as a follow-up for that, can this rally be sustained?
Yes, when you look at the equity markets, they've definitely priced in a recovery, and this is a reflection that the markets recognize that governments and central banks are going to act, or are going to save the day.
They'll do whatever it takes. Is that what you say?
In fact, our own BSP has already cut policy rates by 1.75% this year. And Governor Ben Jokno has signaled that he's ready to do more if needed, if warranted.
Now, in a low interest rate environment, tendency is that equity markets tend to do well. Can we say that happening again during this new normal of with the pandemic and all of that we're still in the middle of it?
Well, definitely. When interest rates fall, that's always positive for companies that are able to borrow lower interest rates for a longer period of time. They can lock in at 2 years or 5 years at these relatively low levels. And that's always positive for the firm or the companies, and eventually for the whole economy.
Talking about companies or industries, what sectors do you see as beneficiaries, quote unquote, of this current environment?
Well, sectors that benefit in this pandemic or a lockdown or a work from home environment, number one would be technology. Can you imagine staying home or working from home without technology, without internet access, without Netflix? What would we do? Second would be healthcare, definitely. Since this is a public health issue, healthcare stocks would benefit. And you see this, there are over 140 companies right now on clinical trials. And the first that would come up with the vaccine definitely would see a surge in their share price. Third would be logistics. Logistics companies. Amazon has shown the way here, but right now, even in the Philippines, a lot of us are ordering food, having things delivered, from our face mask to alcohol to what have you. So logistics companies would be very important in this environment. And finally, in general, e-commerce or the digital platform. It has taken the Philippines a while to catch up in this regard. And it has taken the pandemic to accelerate that process. And so you will see moving forward a lot of startup companies maybe tapping the capital market to fund their expansion.
Right. So hopefully this new normal brings about change, and maybe for the Philippines, we get to move further forward in terms of digitalization.
Moving forward, we'll see a lot of change um, in the typical brick and mortar economy of the Philippines. We'll see this the digitalization, online delivery systems. Maybe this will drive the economy to accelerate moving forward.
Fritz, now that you've shared when is a good time, which is now, to buy US dollars and the peso is strong, and you've set that backdrop as to what to expect in terms of the economic and market environment. Let's now translate those to actionable ideas for our clients.
Well, as I mentioned earlier, Patty, um, it's not enough that you diversify your portfolio in terms of the currency or by buying the US dollar.
Yes,
The second step is equally important, to invest those dollars after you've purchased them. And for the novice investor, the easiest to implement would be you buy dollars and you put it in a dollar money market fund. Um, in the past, you'd always put it in time deposit. The dollar money market fund is equally important. Number one, because the fund manager uh, lengthens the positioning of the fund depending on the interest rate outlook. At the household level, you would usually do 30 days and you just keep rolling it 30 days,
Yes.
30 days, and another 30 days.
It's a habit.
The professional fund manager would look at the interest rate outlook. And if we believe that interest rates are on the way down, we begin to lock in placements for 90 days or 6 months, or if needed, 1 year. And this somehow improves the return of the fund. Second, also, the second benefit of a dollar money market fund for our client would be, rather than rolling over your maturity every 30 days, in a dollar money market fund, UITF, all you need to do is place the fund, your money, and it remains invested until you decide to redeem. And so this gives you a hassle-free way of investing your money.
So it's like you don't have to do any pre-termination and pay penalty fees. That's what you're saying.
Whenever you need it, you can redeem, and you'll get your money in no time at all. And this is a very important advantage, wherein right now most of us have restricted mobility.
Yes, and you talk about having the flexibility. Can this be like a jump off point or like a parking facility?
If you're looking for other investments, um, and you believe that it's not yet the time to get into that investment, the dollar money market fund could act as your parking vehicle until you so decide to redeem and move your proceeds to your eventual investment.
Now, Fritz, if I'm a client who has a long-term investment horizon and I'd like to look into dollar bonds right now, does it still make sense to invest in dollar-denominated bonds given that you're expecting interest rates to remain low for quite some time?
Despite that the decline in interest rates globally and locally, um, aside from the dollar money market fund, you can also look at direct bond purchases, either the US dollar denominated Republic of the Philippines bonds, or even corporate issuances. During the past several weeks, several of the local companies have tapped US dollars and issued corporate bonds. So you can see the likes of PLDT or ICTSI or Jollibee. And I'm sure there are several that are coming in the next few weeks and months. And when you look at their coupon rate, from 2.5 for the ROPs all the way to about 4.75 for the Philippine corporates. These are definitely good dollar yields, given the maturity of the bonds. And you can compare this to US dollar time deposit, currently at around 1.5 or sub 2%. And you could definitely see the yield pick up. And all you have to really do is lengthen your maturity profile.
Your investment.
From 30 days, you have to think longer, 5 or 10 years. What's important is when you lend, the main risk is the credit risk or credit default. So you have to limit yourselves to stable and market leaders, very strong companies who could withstand the temporary economic recession.
So even in this environment, borrowers benefit as they can extend their debt maturities for a lower interest rate. But on the other end, investors can still enjoy a pickup in terms of lending to companies.
You know, when you look at US dollar bonds, the tenors are usually longer, usually 10 years or longer, 30 years in the case of PLDT that successfully tapped the market for a 30-year paper. So
2.5.
You really have to take the long view. If you're not comfortable to position for a 10 and 30-year, maybe the US dollar bond fund might be a more manageable vehicle that allows you to invest smaller amounts and you can get in and out. But you don't have direct ownership of the security, but you'll be able to diversify your portfolio together with other investors.
Fritz, now for our clients who have, shall we say, enough experience when it comes to investing, and they currently have investments in Philippine stocks, would you recommend, or you think they're suitable to invest in foreign markets?
That's a very good question. So for clients that have already invested in local equities and are familiar with the volatility of the market, looking at global equities market now makes sense. As we mentioned, the local equities market has now been lagging global equity bourses or indices over the last 3 and 5 years. And easily global equities have been outperforming the local stock market. So if a client has been invested in local equities and is familiar with the volatility and time period of equities market, then looking at global equities market right now makes sense. You just have to wait for the next pullback.
The next medicine.
And when you look at global equities market, maybe just focus first on the developed markets, the larger markets, the deeper markets, those with very good large caps to choose from. This should be your entry point and your core position.
But Fritz, when you talk about investing offshore in markets, one main concern of our clients is that, do I need a lot of money to invest?
In the past, you needed huge amounts to go into global markets. But ever since the feeder funds were introduced in the local market, clients or investors could now get into global equities market for as low as $500 US. So you don't need a lot of money to invest in offshore markets today.
So these are called feeder funds, correct?
You can tap the global equity markets through feeder funds. And these have been introduced quite recently in the local equities, in the local Philippine market.
And maybe you can share in a brief manner, what are these feeder funds? How do they work?
Oh, thank you. Just briefly, if you're invested, if you're familiar with UITFs, because you got into the peso money market fund or the STF fund or one of our equities fund, a feeder fund starts off with the UITF concept, and it attracts small investors to get in. And a UITF, in the local UITF, the local fund manager buys the securities. In a feeder fund, we select our global partners and we feed through an existing global portfolio or a global fund. And it is the global fund manager that selects the securities, selects the equities, selects the bonds to invest in. And usually we feed through at least 90% of the total fund through these feeder funds, through these target funds.
So let me just get this right. When it comes to the usual investing in pooled funds here in the Philippines, like you, as the fund manager, you're the one who does the selection in terms of the investments or underlying securities. But when it comes to the feeder fund, what BDO has done is they've partnered with global fund managers that are the ones themselves managing and selecting the particular investment, the underlying securities in that existing fund.
That's right, Patty. So we have selected our global partners, and we have brought these funds to the local market.
And what are the advantages?
The first advantage is diversification. You will be able to diversify your investments or your portfolio by getting into them. You diversify the currency from pure peso to US dollar or even Japanese yen. And you're able to diversify your exposures to various markets. The second is access to international markets. As you mentioned, Patty, it's quite overwhelming for a local investor
Yes.
To go to the US or to the
Select
UK or to Europe.
Open.
So by going through the feeder funds, this experienced investment professionals allow us access to deeper and larger international markets. The third advantage would be we have already selected the best of class funds, foreign funds, and we've brought them here. One of our major partners is BlackRock, the largest global fund manager, managing over 6 trillion US dollars in funds, and they have a wide range of selection. And we have selected a few of their funds and brought it to the Philippine market. And finally, I'd say a very important advantage is we have now made these feeder funds affordable and convenient. As I mentioned, for only 500 US dollars, you can get into a global feeder fund of your choice. And it's relatively easy. You can do it by going to the branch and doing it physically, or if you've completed already the risk assessment, then you can invest through online. No? And this has really been very important, especially during the pandemic.
Investing beyond borders has been made convenient and affordable by BDO. Fritz, you mentioned earlier about those partners and one of them being BlackRock. is BlackRock the only partner of BDO, or there are several other fund managers for the
We
feeder
actually have several fund managers, Patty, and when you look at the range of our feeder funds, we have BlackRock that we've selected for several of our funds, and then we have Legg Mason for the U.S. equity funds. We have Nomura for the Japanese market, a market leader in the Japanese market. Uh, and then we have Aberdeen, no? Aberdeen um, as one of our partners, and they are an active fund manager, also quite big in the global arena.
So the biggest fund manager in the Philippines has partnered with not just the biggest in the world, BlackRock, but also the respective market leaders in the various regions.
You're right, Patty. So everybody knows that BDO is a large player in the Philippine market. We manage in the trust group close to 1 trillion by ourselves. But when you look at the global markets, we've also partnered with the largest, with the most experienced um, players or investment fund managers in the world to bring to our local market the best in class for our clients.
Only the best for BDO's clients. Now, you have 8 funds that you've presented. Among the 8 funds that you've presented, can I ask you one last question for this afternoon? Where would you put your money in right now?
Well, there's no right answer for that question, Patty. But what I'd like to do is for the newcomers, the beginners, the first timers, I would put them in the BDO Global Equity Index Feeder Fund for one reason. It gets your feet wet. This fund feeds through an ETF that is benchmarked against the MSCI World Index. Wherever that index goes, this fund will also go. When you look at the top holdings or the top investments of the fund, the top 10 holdings, these are the bluest of the blue chips in the world. And all of them are household names. They're very familiar to all our clients. May they be retail or institutional clients. The top holdings would be the likes of Amazon or Apple or Microsoft or Facebook or Alphabet. Maybe Alphabet would be the unfamiliar name here, but Alphabet is actually Google. And then you have Visa and JP Morgan and the like. So these are really the strongest and the largest companies in the world. And as we go through recovery, these companies will benefit as well. So to answer your question, Patty, I would encourage our clients to look at this fund, study it, and ask your marketing officers or your trust officers questions if you have any questions. But this should be the core or the entry point of any investor diversifying into offshore markets.
Ladies and gentlemen, it's now time for you to be the one to ask what's on your mind. So I believe you've already sent your questions. So Fritz, let me go through them one at a time.
Go ahead, Patty.
The first question that we just answered, which is I guess this would not just refer to the feeder funds, but which UITF in general, maybe in this case, which dollar UITF do you recommend?
Well, we just described the range of investment outlets out there. And it will depend on the risk appetite of our client. We presented from the most conservative, the dollar money market fund, or you can buy direct corporate bonds, or for equities, I definitely, as I mentioned, would recommend the BDO Global Equity Index Fund as your first entry point, no? As your initial salvo. because it's easy to understand. It's easy when you watch or read the news. These companies would usually be in the news, and they would, as I mentioned, lead in any economic recovery moving forward.
Next question, Fritz. But this time, it's for UITF. It's about UITFs in general. The question is, there was a time that the UITF was down and many investors lost their principal. How secured is our principal in the short-term money? Sorry, short-term fund, the peso short-term fund.
Okay, I think the question refers to 2006, Patty. This was a time wherein the market shifted from accrual method to mark-to-market, and from that point in which many investors were not ready or used to mark-to-market, it was really a shock. I think that's what the question was referring to. So all of these investments are not guaranteed, Patty.
UITFs, yes.
These are not guaranteed by the bank or the PDIC. The investor bears the risk, the investment risk. So if you want relatively low risk products, then maybe you should look at the peso money market fund or the short-term fund, which are, for the peso money market fund, it's just invested in various peso time deposits. We look for the best, the highest in the market, and we invest them there, and we lengthen the maturity profile. But they're all time deposits. For the peso short-term fund, it would also have half in time deposits, and then it would have about 30% thereabouts in short-term government securities, so still risk-free. And then the balance we would little in peso corporate bonds, not more than 20%. And this would be the kicker. In today's market, wherein your time deposit rates right now are sub 1% for many of the private banks, these two relatively low risk investments might be interesting for those looking for a yield pickup but with low risk profile.
So URTFs are a vehicle for diversifying one's portfolio, but remember that these are not guaranteed or secured.
Definitely, and I wouldn't stop reiterating that point, that these are not guaranteed. Investor bears the risk, but as we mentioned, we have a very wide range of UITFs and feeder funds right now, and we kept describing in this conversation, Patty, the risk appetite of the client. So there's really no one quote-unquote correct answer for all our clients. It will depend on the risk appetite.
Talking about risk appetite and feeder funds, the next question is about one of our index tracker funds, but the one that tracks the developed markets property. Is it a good time to invest in the developed markets property index feeder fund given the current situation in the markets?
Well, the developed property index fund, or a global REIT, is down more than 20% this year. And again, it could be interesting as an entry point. It was up close to 24% last year. So it practically erased all of the gains of 2019. It has been badly battered, as the global and local property markets definitely have been hit with the pandemic. But on this correction, again, you might want to slowly get into it. because as the market recovers, as the real economy recovers, when the vaccine is found, people will go back to work, people will go back to their offices, office buildings, people will begin to buy high-rise residential property once again, and trade would accelerate once again. And you'll see the bounce. And this steep pullback this year could actually be an interesting entry point. In the Philippine market, we've been waiting for the REIT for 10 years. And Ayala Land, I believe, will be the first REIT that will be presented and offered to the market. But in the world, around the world, global REITs have been here for a long time. And our developed property index fund did very well in 2019. So you might want to look at that as well.
This next question, I'll give back to you. Since you showed earlier that global equity markets have recovered since the lows that we saw in the first quarter of this year, is it not too late, or is it too late to get invested in the market?
Is it too late to be invested? No, but I wouldn't chase markets right now. As we've been emphasizing in this conversation, the pandemic is not over. The number of COVID cases continues to rise in the US and in the Philippines. The total number of cases in the world continues to rise. And definitely the view of a quick V-shaped recovery, I think, is too simplistic. And there will be disappointments along the way. So markets will pull back. So what's very important right now is for our clients to identify which funds that they would want to get in. There are funds, UITFs, both peso and dollar, that are could be used for parking mechanisms. So you could park your money there for now. And when the pullback comes, then that would be an invitation for you to slowly get in. For the global property index fund, it's still down more than 20%. US equities, for the S&P and the Dow Jones, they're still down 3 or 5% year to date. Most of the rally has really been led by the technology space. Amazon hitting $3,000 per share.
Apple as well.
The Nasdaq index. But it's never too late to be invested, to get invested. But don't chase the market. Be calm. Watch it. Learn. And then slowly get in. Don't put all your money in right away. Do it in tranches.
Fritz, now the next, well, probably our second to the last question for this afternoon, now goes back to the Philippine scenario. I guess this could probably be someone who didn't get to join us in the first episode and is asking about how far the Philippine economy is from a full recovery, considering that, you know, the economy is facing a new normal, and that community access or opening of community access is very slow.
Yeah, that's a very good question, and many of our clients and friends have been asking us that question. How far is the Philippines from a full recovery? It's still very early to say. We're calling for a recession, as we mentioned earlier. In the second quarter, GDP, once it is released, it could go down by more than 15%, 15% in 2Q. And full year, it will be close to a contraction of 6%. When you look at these numbers relative to the last 10 years or 20 years, wherein the Philippines has been blessed with 21 years of consecutive GDP expansion, this is the first recession that we've seen since 2008. And the deepest, I'd say, since 1985. When I was still in high school, Patty. So it will take a while before we get back into our 2019 volumes. Um, and we will have to be patient. We will have to be disciplined in as we open up the economy to continue to observe social distancing, um, continue to wear our masks, um, and hopefully we'll be able to continue to progress. Because once we lose discipline, then there's a risk that the infectious rate would really get out of hand.
Thank you, Fritz. Now, for the final question this afternoon, it's pertaining to REITs and will BDO offer them in the future?
Will BDO offer what, Patty?
Will BDO offer REITs as an investment outlet in the future?
We will definitely, well, in
do
the
have feeder
pipeline, in the
funds?
market, as I mentioned earlier, in the local REITs, the first to offer would be Ayala Land, the A REIT. Most likely we'll participate there and we would offer that to our clients. And then there would be, I believe, at least two other property companies that will be offering their REITs. It's too early to say on the timetable. But we are keeping a keen eye. We've had Zoom meetings with them, and we'll definitely update our clients once the timetable is definite.
With that, Fritz, we thank you for once again accepting our invite, and we hope you can join us in future episodes of Market Sense.
Thank you for having me, Patty, and thank you to our clients for tuning in this afternoon. From the number of questions, I think we presented them an interesting topic this afternoon. Feel free to reach out to your branch managers, to your marketing officers, to your trust account officers. And we're just here. We're here to help you navigate these difficult times, and see you in our next webinar session. Thank you and good afternoon.
So if I can summarize our conversation this afternoon, we basically help you diversify your portfolio into dollar assets. You can start off by getting into money market funds, which you can use for your short-term or near-term requirements, but it can also be a parking facility or jump-off point for other dollar investments, such as borrowings, dollar-denominated borrowings of the Philippine government or Philippine companies that you can have or can get recurring income from. And finally, if you have that long-term investment and risk appetite to get into the foreign markets, then you can get into the BDO feeder funds, which has made investing beyond our borders more convenient and affordable. In behalf of BDO Trust Group, we greatly appreciate you taking time to join us today, and we'll see you in the next edition of Market Sense.